Hello, welcome. This is Business Breakfast coming to you live from our studios here in Lagos, Nigeria's commercial capital. I am Frank Omalape. Coming up in a moment. Of course, we do know that it's the midweek edition of the program, the 26th January 2022. But here is what's coming up now. The Monetary Policy Committee of the Central Bank of Nigeria retains benchmark interest rate at 11.5%. as analysts predict tougher days ahead. After a two-day meeting that ended on Tuesday, the Monetary Policy Committee of the Central Bank of Nigeria retains the benchmark interest rate as 11.5% while keeping other monetary parameters constant. We'll look at what this means for the Nigerian economy. And also coming up, the stock market of the Nigerian Exchange Limited gained about 6 billion naira on Tuesday as CBN leaves interest rate unchanged. We have these and many more coming up on the show today. This is Business Breakfast. First, let's take a look at some top business stories making the rounds now. The governor of the Central Bank of Nigeria, Godwin Emefiele, yesterday, 26th January, stated that the Apex Bank will not raise interest rate following the policy normalization being undertaken by some advanced economies such as the United States and the European Union. The CBN governor said Nigeria did not benefit from those funds which were released into advanced economies during the period of COVID-19 pandemic in which some found their way into emerging markets. However, Emefiele, while reacting to the development after the two-day meeting of the Monetary Policy Committee, the first in the year, allayed concerns that the Monetary Authority might possibly react by raising interest rates as well. The CBN left the monetary policy rate unchanged at 11.5% with the asymmetric corridor of a plus 100 minus 700 basis point around the MPR. The MTC also voted to maintain the cash reserve ratio at 27.5% as well as the liquidity ratio at 30% respectively. Away from there now, the Nigerian National Petroleum Company Limited may deduct over 1 trillion naira in the next 6 months from the Federation Account Allocation Committee in line with the decision of the federal government to continue subsidizing premium motor spirit, popularly called petrol. An analysis of the monthly FAAC deductions in 2021 captured by the NNPC as under recovery of the PMS value shortfall, for instance, showed that the oil company deducted about 25.37 billion naira from the FAC in February 2021 when the average price of Brent crude was around $62.28 per barrel. Furthermore, between June and November 2021, a period of 6 months, the oil firm deducted about 888.13 billion naira from the allocation account being subsidy spent on petrol import. This comes to about 148 billion naira monthly on the average. And while the federal government has proposed an extension of the subsidy removal implementation period by another 18 months. And now the federal government has disclosed that working with cooperatives enables the federal government to implement its social investment and intervention programs and ensure that a large number of people have access to the programs. This was revealed by the Vice President Yemi Osinbajo in a statement released by the State House on Tuesday after a meeting with the President of the Cooperative Federation of Nigeria, CFN, High Chief Tajuddin Oriyomi Ayeola. The Vice President said that one of its schemes is focusing on family homes, which the federal government plans to build about 300,000 social housing. Osinbajo noted that the rationale for cooperatives, even in the 1950s, remains relevant today, adding that cooperatives in the Western region and even across the country became important pillars in the economic development of the country. Now, President Muhammadu Buhari has directed all security institutions to immediately leverage 5G technology to enhance national security when deployed. Buhari disclosed this at the launch of the National Policy on 5G for Nigeria's digital economy, saying the federal government will take full advantage of the opportunities provided by 5G for the nation's economy, security, and well-being. The special advisor to the president on media and publicity, Femi Adesina, revealed this in a statement titled "Nigeria looks to 5G technology to address security challenges as President Buhari launches national policy." According to him, the president allayed fears over health safety of 5G, affirming that such issues have been effectively addressed in developing a policy that suits the country. Well, and that's it for now. Where the top business stories coming up in a moment. After this break, we'll take a look at the first Monetary Policy Committee meeting of the Central Bank of Nigeria, as Apex Bank retains interest rate at 11.5%, and what this means for the economy. Well, that's our talking point when we come back from this break. Please stay with us. Glad to have you back now. After a two-day meeting that ended on Tuesday, the Monetary Policy Committee of the Central Bank of Nigeria retains the benchmark interest rate at 11.5% while keeping other monetary parameters steady. Analysts had last week predicted that the CBN might tighten monetary policy during its first meeting in the year. The committee, however, left the key policy rates unchanged. The governor of CBN, Godwin Emefiele, on Tuesday announced that the MPC decided to leave the interest rate unchanged at 11.5% alongside other parameters as some advanced economies had signaled intentions to increase the rate. He said the major focus of the developed economies was affecting inflation. According to him, the MPC believes that its current stance of price and monetary stability is conducive for growth. But while some analysts said the development meant tougher days ahead for Nigerians and companies, while others said the Monetary Policy Committee had no choice but to leave the key rates unchanged. And so let's make sense of this development now. Dr. Lekki Ebenezer is an economist. He joins me now via the telephone. Thank you, Dr. Lekki. Happy New Year to you. It's good to have you again on the show this year.
Yeah, same to you. Thanks for having me on the show this morning.
Yeah. Okay, rising from its two-day meeting that ended on Tuesday, the Committee of the Central Bank of Nigeria decided to retain the benchmark interest rate unchanged at 11.5%, while other parameters are also at the same level. How do you respond to the committee's decision? Is it timely? Is this time to leave it unchanged, or they could have done otherwise?
Okay, thank you very much for that question. The decision of the MPC was based on two major goals, two major macroeconomic goals. Like I always say, every economy has a goal that you pursue. And the four basic macroeconomic goals are price stability, economic growth, balance of payment, and even distribution of wealth. So the FTC, having studied all the parameters, decided there are two things to be pursued at this time, which is price stability and economic growth. And for that to be achieved, those key parameters have to be kept at that rate they are, because if any change is done to them to achieve price stability and economic growth might be difficult, given the factors that other factors that cannot be controlled that is affecting the economy. So that decision based on price stability and economic growth, macroeconomic goals, they are very, very on point.
Okay. When you talk about price stability, at the moment, the inflation seems to be biting hard on the nation, and Nigerian seems to be feeling it. And so how do you reconcile the fact that inflation has reversed its previous downward trend to about 15.63% in December? And I mean, compared to what the CBN is talking about now in terms of price stability, how do you reconcile that?
Okay, thank you very much. The inflation rate that we have right now, of course, as a result of expansion in consumption. And which, if there is an expansion in consumption, it brings about increase in the GDP. However, like I always say, most times, everybody look at the short-term effect of when you have this type of inflation, because there are different types of inflation. And so most people always, generalize the inflation rate and look at the negativity of it. However, there are some situations where when you have inflation, it will drive increase in output and bring about expansion in the economy. And then the government can now use monetary policy to control the side effect. And that is the type of inflation we are having right now. This inflation came as a result of, expansion in consumption, like I said. But the government is trying so hard to balance it through the agricultural sector. So invest, because if you increase, anytime there is a rise in prices of goods and services, which is inflation, then when government step in by increasing domestic investment, it will balance out whatever pressure it can put on an average man. Although that might not be in the short term, but in the medium and long term run, everything will balance out, and then it will be a win-win situation. When there's increase in production, then before we do it, the pressure of inflation will fizzle out. From people will no longer be feeling it where it should be. So the type of inflation we're having right now, even though in the short term people will be going through a lot, but the long run effect is that it will boost output, increase investment, and the pressure will balance out over time, which is
okay. Let's dwell more on that type of inflation. Now that you talk about the types of inflation, if you look at the core inflation, which is outside the consumer price index, I mean, you talk about other products that are not consumables. That's called inflation, which is about 13.5% or so in December. But if you look at the wide headline inflation is around 15.63, then you have the food inflation, which is the consumer price index, at about 17.37% in December. I mean, one would have expected that CBN factor these types of inflation, especially the food inflation, which is core, major for the average Nigerian, while making decision at their first meeting. You don't think this will make any difference?
Yeah, that's what I'm saying. The CBN has realized that because the consumer price index is not favorable, so the CBN decided that they are going to reduce the pressure of inflation from the agricultural sector. So they understand that, when consumer goods, when people are feeling the pain in terms of inflation, what can the government do to ease the pressure? So you have to look at what sector of the economy needs to be boosted, so that when that sector is boosted, then, the pressure can be eased out. And that's why I said they have a clear-cut plan of, reducing the pressure of consumer inflation from the agricultural sector. They stated it. They are going to put a lot of money in the agricultural sector, so that when there's food produce, commodity production in high quantity, that can drive down the pressure of inflation on average individual.
There were expectations that the CBN could have tapered with its rate, either to create a kind of attractions to the Nigerian business environment. Hence, there's been speculations around policy rate normalization in the US and elsewhere in Europe. So do you think the CBN took risk by leaving rate unchanged, factoring in the interest rate normalization in other developed economies?
Yeah. The decision of the MPC at this time has been considered critically. If you look at the statement that is rolled out by the committee, now they realize that because we in part of the world, especially developing economy, there is a slow growth rate in almost every sector. The pandemic has really dealt with a lot of sectors in the economy. And then, the country is just trying to battle with them. So I would consider that they realize that if we want to achieve all the macroeconomic goals at the same time, there's going to be issue. Because, when you are making policies, when you are making decisions, you don't only make decisions based on some sentiment, because you have to look at the consequence of that decision. And so I would consider the consequence of, adjusting the inflation rate to suit the business men. The consequences may have a far more more reaching impact on an average individual and even some other, sector of the economy. So it is better that they put it at that rate so that that can enable investors to supply more. Don't forget the law of supply says that the higher the price, the higher the supply. And other business now more when the price is high. So when they look at all of these factors, what effect will it have on businessmen, what effect will it have on an average individual, it is better to keep the rate at this level and not to do any adjustment so that they can balance the supply side of the economy and the demand side of the economy. Yes, in other parts of the world, they've done a lot of adjustment to their parameters so that it will suit them. But don't forget, whatever that is happening to Nigeria is peculiar to Nigeria, and the decisions we have to make have to be in tandem with what exactly are the goals we are driving at. And I've told you the two major goals they want to achieve is price stability and economic growth, and that's why they kept the rate at this point.
Some analysts have said the decision, by the MPC to retain the monetary parameters, this could, pose tougher, tougher conditions ahead for Nigerians and maybe companies here. So, although it's in between, a bit of debate here. Some are in support, why the CBN, left it, and some are not in support. So, let me ask you, where do you stand in all of this? Do you think these current interest rate and some other parameters left unchanged means tougher days ahead for Nigeria?
Yeah, like I said, keeping all the parameters at this rate is a win-win situation for everybody. Though the short-term pressure will be on the demand side of the economy. And I use the word short-term pressure. When you have decisions have consequences, and so you don't just make them. And then the MPC haven't looked at the supply side of the economy and the demand side. They know that if we keep this monetary rate, if all these parameters are kept the way they are, one side is going to suffer, which is the demand side of the economy. So they came up with a strategy that what exactly will bring the pressure on the demand side of the economy, and that is the consumer demand. Because when prices of products are high, an average individual is suffering. And so they came up with a plan that, to cushion that effect, what we need to do is to put a lot of money in the agricultural sector, and so to balance out the pressure. So for me, I am on the side that this rate should be kept like that. The cash reserve ratio is still left the same. I told you the cash reserve ratio being kept at that point makes it easy for banks to be able to give money to businessmen to do business. And when they do business and they do supply, there will be competition, there will be increase in investment, there will be increase in the level of output, and then before you know it, consumption will rise. And that is, those are all the parameters of GDP, because the four parameters of GDP is consumption, investment, government expenditure, and net export. So all of these things will be taken care of. So if people are looking at it that the rate should have been adjusted just from only supply side of the economy, it will not be fair to the demand side of the economy in the long run. So I feel that this decision is right, and the reasons are genuine.
Okay, let's look at one key issue before I let you go, Dr. Leke. If you look, we're in the pre-election year, and if you look at the cash reserve ratio, still left unchanged at 27.5%. One would have thought that the CBN could have perhaps increased, that tool a little bit to reduce the money in circulation. How would you respond to that? Do you think this will make any difference? Because, of course, we expect that there will be a lot of money in circulation because of campaigns and all of that due to the pre-election year and activities in the year.
Yes. Well, that is one approach. Yes, you are right. If cash reserve ratio is increased, it will reduce the level of money supply. Don't forget that when there is a decrease in level of money supply, that will lead to deflation. So government will not just make that decision just to reduce supply of money because political issue is coming up. However, having said that, black money. What is black money? Black money are monies that are moving around years before or days before election that do not have account. And so a lot of that will be happening in the political space. But don't forget that the CBN is trying as much as possible to separate the economy from the politics in the country. Because our political system is so tied to our economic system. If they make any decision in politics now, it affects the whole economy. And so the only way to achieve that is that don't let us keep associating our economic sector to the political sector. So let's make decisions that will affect the economic sector. Don't let's use political factors or the political situation to be making decisions in monetary policy. Because if you are doing that, you keep tying the economy to the politics. And that's not good for.
So in other words, you are saying it to be too early to start factoring that in monetary decisions and policies. Well, on this note, I really want to thank you, Dr. Leke. Ebenezer is an economist. Thank you for your time on Business Breakfast.
Thank you very much for having me.
Yeah. You've been watching Business Breakfast coming to you live from our studios here. And after the break, now the Nigeria equities market returns to bullish path on Tuesday as investors gain 6 billion naira, while CBN leaves interest rate unchanged. After the break, Ambrose Amodian, Chief Research Officer Investor Limited, will be joining us for more analysis in the capital market. We'll be back in a moment. Please stay with us.
Beautiful looks command respect, they say. The perfect body, the perfect grooming, and ultimately the perfect skin. Looks, style, and grooming makes the ultimate man. I've found a ridiculously easy way to make my skin always feel epic. My name is Neo. I found Blemiviv, and now my skin finally makes sense. Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiviv Skincare and Spa. My name is Neo, and I'm proud to be a part of the Blemiviv family. Most people don't understand the magic of a perfect skin, the allure of a well-pampered skin. We bounce from skincare products to skincare products, from spa to spa. Looking for that ideal solution. I found the solution. And it's Blemiviv Skincare and Spa. My name is Neo, and I'm proud to be a part of the Blemiviv family.
Glad to have you join us now. In the second part of the show, we turn attention to stock market now and look at the market yesterday. Then we get back to looking at what the market is doing today. Already, it just about 1 hour, 30 minutes into today's trading, the market doing already about 0.4% in the new day. But let's look at yesterday. The stock market of the Nigerian Exchange Limited gained 6 billion naira, even as Monetary Policy Committee of the Central Bank of Nigeria maintained status quo on its rate. Members of the MPC voted unanimously to maintain the monetary policy rate at 11.5% at the just concluded meeting. The committee also voted to retain the cash reserve ratio requirement at 27.5%, liquidity ratio now 30%, and a symmetric corridor between the least and the ceiling at plus 100 basis point to minus 700 basis point. However, the NGL share index increased by 11.24 basis point of 0.02% to close at 45,939.51 basis point at the close of Tuesday, from 45,900 basis point. Similarly, the overall market capitalization size gained about 6 billion to close at 24.755 trillion naira from 24.74 trillion naira the previous day. So we'll look at the upturn, which was imparted by gains recorded in large and medium capitalized stocks, amongst which Seplat, Energy, Ecobank, Transactional Incorporated, Champion, Breweries, Nigerian Exchange, all in on fire at the close of yesterday. So let's get talking now and look at how the monetary policy decision, the outcome of that decision is impacting on the equities market this morning. Mr. Ambrose Amodian is a Chief Research Officer, Investec Consulting Limited. He joins me live here in the studio. Thank you for coming again. Yes, you were here the last time and you predicted that, yeah, the MPC was going to be retained, as it were, and it came to pass. But how would you, express, or would you address this?
Yeah, actually, I said it earlier that it's too early for you to adjust rate in a company that's still recovering, and so the recovery is not too strong, weak, and very fragile. For me, it's a good show that they have retained it so that we can still find from here to the other end of April to know where the economy is going. Also, don't forget that whatever is happening globally has a way of influencing other climate. For that, if at the end of MPC meeting there in US today, if they increase their rate or they hike their rate, yes, it will mean that funds will start leaving the emerging market back to the matured market because of high rate, and everyone want to play save and for that. But the good thing that there's something that need to understand in our market, especially in the equity market. For the last 2 years, we've seen less portfolio foreign investor in our market, and that is a plus for this market. And I tell you that is why even SEC and NSE should do more education. Let's encourage more local participation in the market, so that we can plan with our market the way it should be, anywhere in the world, that you plan with, equity market, stock market, capital market. Now that they are left here, I don't think their rates today won't affect us much as in terms of market, because before, I'm telling you, if they are the one concerned about 70% or 50% of the market, with this adjustment we're expecting today in US, you see sell off, the market are turned red. But good thing that as market are open today, we're seeing the market is already in green. Why? Because any season is coming closer. And yesterday, about two company, what is called Cabri and Police Microfinance, released their unaudited account, and these numbers are not bad at all, especially for microfinance. Growing their top line with about 20%, bottom line about almost 54%. EPS moved from 27 kobo to 41 kobo. It tells that company alone have given a sign. That's why that last time they increased their share with a right issue, their earning per share still stood at 41 kobo for full year. That means dividend of 20 kobo is already there. But if they are just to 35 kobo, good for investor. But for me, it tells that more results like this, when you hit the market, it's going to change the face of the market. Like I said earlier, that any season is more about volatility, not more about direction. But who have seen that these earnings are coming their price, you see that you see market will move up and down. More money or more liquidity will come to the market because they want to take position. You can see that this morning after the MPC meeting, market has started looking up already. And yesterday, when the filial get to the market kind of rebounded yesterday, just because they know that this is going to be readable. Everybody was seen at the fence before, we don't know what's going to, but I told them earlier that it's too early for MPC to adjust rate up, and they know that yes, we are already in a recovery move in terms of economy. Like I said earlier, if you look at even the quarterly growth in terms of GDP, they are not really consistent. Yes, they are in positive, but they are not moving up from 5.1 to 4.3. We don't know what the last one will do now, but for that we need to wait and see the last quarter GDP. I know that it's a kind of a festive period, but the good thing is that the purchasing manager for December was up from 50.8 to about 52 point something. That is that we'll see more activity. And that December is also a festive period, the head of production to meet demand. For that, let's see what happens from now to the end of the first quarter, 31st March. I believe this earnings season will shape the market now that the rate is leveled. Only today, we're going to see the outcome of the primary market option of the TB to see whether TB rate is still going to go up or flat. That is really what we're waiting to see. But if market has started in this bullish direction this morning, it tells you that, yes, even from that market, we're not seeing much change. For me, good investors to target good equities now that are really selling at a good price, looking at their fundamental, looking at their charts, which is the technical analysis, and also the history, that's the dividend payment, to guide you to where to be at this point. The market for me, at this first quarter, it's time to look for money. Yes, people are thinking that election year, I agree with you, but it won't be at this first quarter as part of election. We are seeing a lot of party moving around there, but it will be from either third quarter of or second half of the year. We cannot see movement of either fund or nothing, but yes, pre-election year, we expect that liquidity will be around to play.
I want us to look at because we talk about earnings, and we're going to dwell more on looking at healthcare companies and look at their third quarter earnings. But just before we go there, I want you to just when do we expect the next CBN's meeting? Because, of course, the CBN say they decided to leave it unchanged to see how the market and the economy is going to react, especially with the normalization we are witnessing in developed economies.
Yeah.
So quickly, before we go,
We expect the next MP to come in March. It's every 2 months that after we'll have a month, all February for us to look at the impact of the decision. Then March again. That is why money policy anywhere in the world is to put the tune of the economy, to give economic direction. That is why they come often more than every other meeting, because they know where the economy is going, what to do to change. That is why anywhere in the world, MPC meetings that come more regular than any other meeting in terms of economic management. Because that is where they give direction, tune what will impact the economy, positive or negative. They have to check things in the economy. That is why it comes every 2 months, so that they can easily quickly make adjustment to correct all of them. By March. around between 20 to 24, we'll be looking at another MPC meeting. But I know that this and that March might not see, but from the second half of the year, we might start seeing adjustment in rate. But that depends where the economy is going, because it's not just because the mature economy is doing a normalization. You want to jump into it, you want to look at your peculiarity and what's happening in your environment to show you where you are going.
Okay, let's look at the third quarter earnings position of some healthcare companies. But the force is fits in, because we really do not have much attention to the healthcare stocks. I would say that because we talk about the banking, we talk about the industrial goods and other sectors, but really don't attention. So how much of appetite of investors, for instance, we look at fixing third quarter earnings, it's in the market turnover of about 21.75 billion. The profit after tax, it's looking 2.34 billion naira, and you also have the earning per share there. Their profit margin, of course, is up about 10.69% there. So with their dividend yield and all that, how strong, fundamentally strong, is the stock of Fitson, given their third quarter earnings? Actually,
looking at that sector, before now, it has been a setback for the sector, but since the issue of COVID-19 came on board, government have directed attention to that sector, and consider that since then we have seen improved activities in that industry, and that's also a strong fundamental news or sentiment that has been supporting that sector. The government has tried, okay, let's inject funds, especially CBN know how to put funds so that they can have access to cheaper funds to do their business, so that we can, even there's plan in government to start, government already planned that we should have our local produce a vaccine here. If that come on board, that will put more activities in that. But as we speak now, looking at the numbers I just asked, I see fixing has really done well in terms of numbers we are seeing. That number tells you that fixing is heading to somewhere. For third quarter, for a company that is selling below 8 naira, having a 1 naira 11 kobo as a third quarter. And also if you look at their performance in terms of dividend payout for last year, that they paid 25 kobo, the earnings also, cannot be compared to the earnings we're seeing today. That means they are likely to be growth in their dividend payout, and also with the attention they are having, we'll see activities improving in that sector. That means a good investor, knowing that healthcare sector or healthcare good products are like essential products, that even the people that are aging, the younger ones are coming, people need to have access to to healthcare. For me, I think it's a sector that if you are thinking long term, where you can start building up, because it has come to stay. And now that government is giving attention, I think we'll have less government officials traveling out again. That means consumption of all these things will be here. That will be a good thing for the sector. And the number shows that if you're an investor, this kind of stocks in this sector should be in your portfolio, so that as activities are improving, like I just said, if by tomorrow say a World Bank grant loan to any of them, whether that's fixing, me and Baker, GSK to start producing a vaccine, it also add additional momentum to the sector. For that, I think
let's
the numbers
quickly
are
look
looking
at good. Let's quickly look at them one after the other. The GSK GlaxoSmithKline stock earnings is out. Turnover is about 16.5 billion. Well, the profit after tax is not so impressive if you look at it. But if you look at also May and Baker, let's go to May and Baker. Third quarter earnings, 8.48 billion. The profit after tax, it's impressive if you look at it there. And then the profit margin is about 10.94%. I think good one for investors there. The name is the next one there. Third quarter earnings is out with about 3.04 billion. in terms of turnover for them. So I just want us to run through quickly. Then you can then pick up, and then we'll start talking about it. Pharmadeco is one company, of course, that is also more like not really active the way I see it, but of course not doing badly with the fact that it seems they are under the bottom. But I know you have something to say about that one. But let's look at quickly the tourism industries third quarter earnings. And if you look at the figures on your screen, the profit margin is badly down, 48 in the negative, 48.46%. I think these are much we have, but let me quickly show you, because there's no dividend yield for them, and also for EcoCorp as well. There's no dividend yield for them as well. Even their any use, it's in the negative for EcoCorps. The same thing for any use for tourism industry is in the negative. So maybe we should let's start treating it. Where do you start from in all of these health companies?
We look at the ones that are really, we say they are active, but I think most of them are moving from even the negative position to a positive position. That is why, as an investor, you look at a company that's moved from a negative position to a positive, like Pharmadeco. Pharmadeco, for me, I think the company is really bouncing back. Investors should put their gaze on that kind of company. Their share initially is very small, and they're coming back powerfully. Yes, as we speak now, they posted a red account, a negative account for third quarter. That doesn't mean that fourth quarter they won't wipe it out, or first quarter 2022. For me, if you're a long-term investor, this way should also be taking position. I said that healthcare sector will soon become one of the drivers in the market, because attention is going there. I know how much government is investing in importing drugs. Even though they are getting the vaccine free, or they are spending money. I mean, if we can do it locally, it's going to go a long way to drive activity in that sector. Even the farmer, what's it called, the Morrison, the Cocoa, all of them, when that sector is doing well, it's going to reflect on them. But for the ones who say that yes, they are consistent in their dividend payment, is fixing. Me and Baker, especially me and Baker payout, has been improved from 20-25 to almost 30 kobo. Why for fixing we saw 25 kobo last year? For the report. Earnings of fixing about 111 kobo will give you an idea that this is also becoming a leader in the industry. Before now, GSK have been the leader in the industry, but in terms of performance, earnings, consider that fixing taking over from GSK. But GSK number posting 10 kobo for third quarter for me is a weak number. That's why the price is just crawling and but see the way fixing is going. But there's a news in the market that even fixing and GSK, they are going to agreement for one production of one product. If that come to be, that will be a plus for GSK and also for fixing. But for me and Baker, before now, like about 6 years ago, federal government has always signed an agreement with them to produce a vaccine, but they had that facility already on ground. That means if government is looking the way of where to start with the vaccine production, I think me and Baker will catch me and Baker and fixing.
I'm wondering how come the dividend yield is attracted about 7 naira 46 kobo, and then you have a turnover of 8.48 billion. How do you put that together?
No, if you look at you are talking about what do they pay to their shareholder? They pay 30 kobo, and the price of around 4 naira 40 kobo. That's why the dividend is at almost 7 points, which are above even the treasury bill, yield for a whole year. For me, it's not a bad one. And also this letter that there is consistent activity now. Now that the Omicron is here too, all that means government attention will not move away from this sector, very soon. And also, if government are investing there, that means government going back. I don't see it being happening again, because we need to make health facility available for every Nigerian.
So you are saying after the oil and gas index and the banking, the next index to consider, or sector to consider, is
after the
health
oil,
sector.
the health sector, because for people we are thinking long. Because I tell you, health issue is something that has come to stay. That's why if you look at the matured market, where you see, other we call it mech tech, we are doing about tech, they see that what do they are waxing strong. But here, it's just because we're looking about manufacturing. I know anytime you see any, mech tech coming or health tech coming to Nigeria, it's going to be because that will have access to technology or concerning health. That for me,
let's try to wrap up now quickly. If you
market.
can do this in 30 seconds, what do we have going? This is midweek already. Wednesday is the third trading day of the week. We still have about two trading sessions to go for the week. What's the projection like before we go?
Yeah, we have seen the market on the sideline for almost 3 days. The market was flat on Friday, Tuesday rebounded marginally on Tuesday. Today, we see market open on a strong note. I see that we also expect a mixed performance before the end of the week, and that will tell you that the number that will come to the market will determine the volatility we're going to see the market. And that number, I see for me, is a plus for the market, because that's where investors are looking at to see such number that will guide them. Already, I've told you that the one that came from Police Microfinance was impressive, and while the one came from Cabri was missed. Cabri was up. The top line was up by 20%, while the bottom line, which is profitability level, was down about 11%. Their earning EPS declined from 50 kobo to around 44 kobo. For me, investors should know what to do at this time. As these numbers are coming, is to guide you where you put your 10 of dividend paying, because unaudited account tells you that this company are ready to also to release their audited account before the end of 31st March. That means what we are seeing now is whether you should stay put in that position or you should sell off. For me, it's a good one for investor now. The market is starting on a good note, knowing that the MPC have retained that means for us, look at
there'll be a bit of stability in the market.
Exactly, and also those that I give you a yield that is above inflation.
I think we should leave it there. Thank you so much, Ambrose Amodian, Chief Research Officer Investor, for coming on the program. We appreciate your time.
Thanks.
You're still watching Business Breakfast. We'll take a break now. When we come back, of course, we'll look at the crude oil market and what is trading there now. We're back in a moment. Please stay with us. Let's look at the global oil market now. Crude oil futures edged lower in mid-morning trade in Asia in what was expected to be a day of thin trading as participants await the outcome of the U.S. Federal Reserve meeting for price cues. Singapore time, earlier in the day, the ICE March Brent futures contract was down 12 cents, about 0.14% from the previous close of $88.08 per barrel, while the NYMEX March light sweet crude contract was 27 cents. That's about 0.32% lower at $85.33 per barrel. Financial markets have been on edge in recent weeks amid a decidedly hawkish turn by the Federal Reserve. The policymakers are meeting over between January 25 and 26, and investors saw any hawkish signal from the Fed will likely bolster the US dollar, which is in turn could be expected to weigh on crude oil prices. Well, that's much we can take on today's program, and many thanks for watching. We'll be back again tomorrow. I am Frank Omalape. From all of us here, good morning.